Good morning, neighbor. It's Mario with the Escobedo team here, your local mortgage experts. And in today's video, I wanted to talk a little bit about the importance of understanding and reviewing your loan estimate. All right, let's get started, guys. I actually preach this to not just my actual clients and customers that I'm working with on their actual mortgage loans, but I always preach the importance of this to my real estate partners as well, for those that may be a little bit newer in the business or they're not used to reviewing the actual loan estimates and closing disclosures with their clients. Extremely important to do from the very beginning of the loan process, guys. Anytime you are getting a pre-approval, you should, or your lender should, be able to produce a loan estimate for you. What is a loan estimate? A loan estimate is a detailed breakdown of all of the estimated costs and fees associated with that mortgage program that they're putting you or planning to put you into. Throughout the loan process, as you get into underwriting, as you go through the mortgage process, you'll have updates to your loan estimate anytime there's significant changes made to the loan details. You'll also have to receive a closing disclosure, which is a very detailed breakdown, more specifically to the actual dollar amounts you'll see at closing at least 3 days before your settlement date. Now, what on the loan estimate or the closing disclosure should you be focusing on? Of course, most importantly, it's going to break down the specified note rate, which is your interest rate that will either be locked or not locked at the time of release. That'll all be disclosed there on page 1 of the loan estimate. You'll see the total monthly principal and interest payment. You'll see your taxes, your property taxes, your homeowner's insurance, and your HOA amounts, and if they'll be escrowed. And then on the second page, you'll see individual boxes for different items that need to be paid, to settle the loan. Specifically on our side, on the lending side, the broker side, the bank side, we want to focus on, or you as the borrower, as the buyer, want to focus on box A, origination charges, okay? This is where you'll see all of the different line items and amounts that a lender, bank, broker, whatever, could charge you. It's all going to be listed there. So pay attention to the second page of your loan estimate in box A to see what junk fees they may or may not be charging you. On our end, with the Escobedo team here at Model Mortgage One, we have no box A items because we don't charge any borrower paid or closing costs or junk fees. Okay, so unless a borrower or buyer voluntarily decides to buy down a rate, pay discount points, use seller paid closing costs to do so, box A on our end is empty, which means less out-of-pocket expense for our buyer. So again, guys, make sure you're reviewing those loan estimates. Make sure you're reviewing those closing disclosures, whether you're the buyer, the borrower, or the real estate agent. I suggest that you guys come together. Make sure you're reviewing. Make sure your loan officer, loan originator is reviewing with you. And if you guys have any questions, please make sure you DM me with a copy of the loan estimate that you're currently being presented by the lender, bank, or broker that's currently helping you, and we'll review together. Have a wonderful day, guys. See ya.